weekend. Ira Epstein with your Metal Market Wrap-Up, your weekend edition. We're going to look at weekly charts now, and this is for Friday, the 16th of September, 2022. Well, I warned you last week that I wouldn't have gone through the CPI report, and those of you that went in short had a great week in a number of markets. Come on. The dollar rallied, stock indices fell apart. Interest rates, the curve yield is going bonkers, is pushing back out towards 50 points. It could go to 100 before it's all said and done. The Fed is going to keep going on. We have an FOMC meeting coming up this Wednesday at 1 o'clock. We get the announcement at 1:30, the press conference. I would expect that we get a 75 basis point hike. There is an outlier chance of 100, but I don't think it's necessary. The Fed won't want to overdo it. The market's built this in, and it's comfortable. Be careful. When you get that 75 points within 24 hours, you could be going the other way in the market because it's been a one-sided breaking market. Repricing of stock market, that's there. Gold market knows that's coming. It rallied today. Copper market's up today. Silver. Could be a bear market bounce. Don't know. But it's things that I like to watch and see what the market is doing. When I look over here on the chart, you can see that on a monthly chart, you're staying one way to the downside. By the way, I forgot to take these off. I could have done that, but these are all the different tools that I have on my charting software, and I can use them to create whatever I want. It's a pretty neat piece of software, and it does a lot of cool things. All right, but in any chance, as you can see how the market is just staying under that, so the bias is down. The bias is most certainly down on the weekly close, and again, you're under the 18-week, you're under the 18-month moving average of closes. Bearish. There's no other way to say it. That's bearish bias. If you had a hard rally, wherever these red lines are, that's where I'd expect the resistance to be on a very hard rally. To get there, you have to go up from the current price roughly $100 an ounce. That won't be an easy task. When you look at the weekly bar, you had an outside week down. Outside weeks are signals on a chart of continuation of a pattern. Now, to break that, you've got to take out the high of that. To capture the market and say something else is amiss, you got to do it in short order within a 2-week period on this type of chart. That's my own analysis on that. I look at the market with lower highs, lower lows, bearish. The market is underneath the 18-week average, and for all you naysayers out there, when we had the bearish crossover, I told you I was looking when this was setting itself up. We'll come right over to it here. I want to get right where it happened. And I told you my charting technique teaches me that if you get a crossover, normally the market's going to take out the most recent low in the market. That's the goal. It doesn't have to, but that's what I look for. Because what's it going to trigger? It's triggering an event. So what the market did is I got my bearish crossover, the 18 under the green, and I'm looking for that to be setting itself up. That's all that I care about at this point. And you tell me that I didn't get it. Now, the market also happened to go down this week to the 200-week moving average. Another thing that I teach is that the first challenge of a 200-week average, which is a 1-year average on a daily chart, but on this is a weekly chart, it's longer than that. It's how many years? Okay, there's 52 weeks to a year, so it's a 4-year, roughly a 4-year average, if you think about it. That's a support zone, my friends. It's old-time support. You don't just cut through it 1, 2, 3. I'm sorry. It's not that easy. Add to that, if you got the Bollinger Band there, and I can see that there's arguments I can make that the market is down to its first major support area, and as a bear, I think it's time to leave the party. The easy money's off the table. I could be very wrong, but that's what I think at this point. Momentum down, bias down, trend down, but my objectives have been now reached. When I go to the gold-silver ratio, it slipped and stayed under the weekly average, which means silver is now stronger than gold. When I go to the silver chart, silver's in an interesting spot. Unlike gold, which is down to its Bollinger Band and 200-day average, this is up to its 18, I said day average, to their weekly averages. This is up to the 18-week. The next resistance, if it can keep going, is 2071. That's a long ways from here. 2071, you're at 1929. That's $1.50. That's a big move. but that would be it. Is this where the pros are getting excited about reselling? Probably, with stops over the 2087 area. So as nice as it is that it got here, it's not proving to me that it's anything but a bear market bounce so far. I see nothing in copper I'd want to do. Again, there's that 200-week average. I teach you that the first times you hit it, watch out. You got under it, you came up, and all of a sudden you're finding support at it. Now, if it takes it out again, then I wouldn't want to be friendly. Then I would think that if you can get out and under that one more time, you might be going back to the $3 level. Problem is, I don't think that's going to happen. I think the market's now trying to figure out a way to attack that 18-week and go from there. There is no trend. You have a higher high, lower low. In the platinum market, you've accomplished my downside targets. Each time you have hit this Bollinger Band, you have come back. You tell me, right to that 18-week average of closes. Do you disagree? It looks so easy. It's so hard to do the trade, I understand. But it's there. It's there. How long do you stay over the upper Bollinger Bands? Very little. So people with big bank accounts, are they selling the Bollinger Band? Some of them are, looking for it to move to the right-hand side of it. But it's big accounts. I mean, you can latch on and just keep going. I don't do that. This scares me. How do I measure my control? And then how do I know it's always when you get to the band's going to get back to that 18-week average? If I could master that, then I'd have the whole game plan very comfortably in my pocket. It doesn't. But what it does do it gives me a big chunk of that game plan. It's telling me don't stay short beyond those numbers. You're probably going to get a bounce, then look to reestablish your position if the trend is down. In the dollar index, it's not much different. I love currencies because they're big, real big. They're big international markets. It's hard to move them. You need the government to pull a surprise on you, such as if Japan all of a sudden intervened, that would be a surprise because as a member of G7 and 20, you're not supposed to do interventions. Remember that. Higher lows, higher highs, still bullish. Embedded reading, well, let's see. Week 1, yep, both numbers over 80. Week 2, week 3. So it's a two-part sword. Now let me explain the two parts. I say you keep buying breaks in the market, looking for the Bollinger Band until the red line closes underneath 79. If it closes under 79, you now want to abandon your bullishness because you're probably going back to wherever that 18-week average of closes is. That's all I've got there. So that's where that part ends. I forgot how quick I do the metal one. I want to remind you, keep hearing me talk about the Bollinger Band, the embedded reading. If you haven't taken the course, it's 13 chapters. The course is like $90. You get my charting software to work with it. You get the data with it. You get access for 2 weeks to all my research, ETFs, everything combined. It's a darn good deal. Here's an ad about it. Think about it. Not a big risk on your part for the money. Maybe you learn something that sticks with you the rest of your trading career. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.